The June market stats are out, and it shows that the Calgary's real estate market is continuing to shift. Inventory is up, and prices are softening in some of the different segments. So, what does this mean for investors? Well, it's not all necessarily bad news because I think this could be your next big opportunity to get into the Calgary market. Hey, I'm Kyle, and if you've been watching the Calgary market, you've probably noticed that we're entering into a new phase. This is not a crash by any means. This is not a disaster like that's happening in the Toronto market, but this is a rebalancing. And this is where the smart long-term investors win. Because right now, we're seeing more inventory across the board, especially in the condo and townhome segments, where listings are up over 30% above long-term trends. Economic uncertainty, tariffs, and even expectations of lower prices are holding the real estate market and buyers back. Overall, the benchmark price for condos is down over 3% year over year to about $333,500. Townhomes, you're also down about 3%, sitting at about $453,000. But detached homes, well, those are still holding quite strong. The benchmark there is $764,000 and pretty much flat year over year. So this extra inventory means more choice and more competition. Ultimately, more motivated sellers and more room to negotiate if you're buying. If you're selling, you need to be aggressive. You're not going to get the peak 2024 prices. And if you're renting, the rental market is still very strong. I just personally rented 4 units in May, all within about 4 weeks. If it's taking longer than that, then you aren't priced correctly. For pre-construction, I am getting deals and incentives from developers that I didn't even think were possible a year ago. It would have been a flat no, and they would have laughed at me. But what's the long-term picture like in Calgary? Well, the market and the economy are still incredibly strong in Calgary and across Alberta. Alberta's population growth is above 20-year averages still. Alberta is leading Canada in interprovincial migration. Economic forecasts show that Alberta is going to lead the country in growth for this year, 2025, and next year. And Alberta is one of the most business, tax, and landlord-friendly places in Canada. Calgary and Edmonton are some of the most affordable major cities in Canada as well. So yes, the market is adjusting, but if you've been waiting for the right entry point, for more selection, for better terms and incentives, this is your moment now. So let's talk about how to position your portfolio for the next 5 years. Get in touch or book a quick call. Let's turn this shift into an opportunity. But for now, let's take a deep dive into the June 2025 numbers. So we'll take a look at Calgary condos first. Sales have continued to decrease. They peaked back in April, and they're quite a bit lower than 2024 and 2023 levels, but still above 2021 and those previous years. New listings has come down from last month, but is still quite a bit higher than some of the more recent years. Still below last year's levels as well, though. Sales to new listings, though, is sitting around 50%. This means that about for every 2 units that are coming to market, only one of those is selling, which is causing inventory to continue to build. We're pretty much now at a 5-year high for inventory levels, above anything that we've seen since 2021 and earlier. Months of supply, you're sitting at about 4. Now, this isn't a train wreck like in the GTA where some areas have over a year of inventory. 4 is actually considered a balanced market. So people have a lot more options available. And days on market is sitting at about 41. Benchmark price has really been flat over about the last 18 months and since the beginning of this year. Right now, we're sitting at $334,000. Back in January, that was $331,000. So you're definitely not seeing a crash. Really, it's stable market that is just kind of going sideways while we work through some systematic issues. Mainly the fact that international immigration and temporary foreign workers have slowed significantly. We've actually seen decreases in these populations, which is softening demand, especially for apartment style or condo type properties, which is directly impacting the shifting rental and immigration trends that we're seeing in Calgary. So while price adjustments, they can seem concerning, they're also the door for strategic acquisitions if you know where to look. For investors looking at cash flow focused opportunities, I definitely have some that are incredible. So definitely reach out because it's a much more competitive market than it was a while ago. So now going to the townhomes. Very similar, sales are down as well month over month and quite a bit lower than we've seen over the last couple of years. New listings, quite a bit higher, although they are kind of bundled within this close range between 600 and 700 units. Sales to new listings, though, similar to condos, is sitting at about 50%, and that's causing the inventory to continue to increase. Similar to condos, there's about 3.4 months of supply, indicating a more balanced market. And days on market, we're sitting at about 33. The price, again, kind of treading water, going sideways over the last 8. And for price, we're really going sideways again, treading water over the last 12 to 18 months. It's 450,000 now, was 445,000 at the beginning of the year. So definitely no crash, and I don't think there is going to be a crash. We're just going to continue to go sideways as the market consolidates. So if you're an investor and you're looking at a great entry point or seeking value in a more stable pocket of the market, this could definitely be it. I have townhome opportunities that are currently on sale, selling below resale values. That's a unicorn. It just doesn't happen. Normally, pre-construction is always priced more expensive than resale. And now moving over to detached housing. Sales has been pretty tight. You're at about 1,200 sales, although definitely lower than some of the previous years. New listings, quite similar to some of the previous years, but sales to new listings quite low at about 56%. Inventory is starting to build again. It'll be interesting to see what happens as we go throughout the rest of this year. Months of supply is only sitting at 2.6. So this is technically a balanced market, but just above or just out of a seller's market. And days on market is 30. These are dream statistics that the GTA wishes that they had right now. And you have seen the benchmark price come down a little bit, but you're slightly higher than the prices for most of last year. So similar to all of the other markets, kind of treading water here. Nothing significant is happening, and I don't expect much significant to happen over the next 6 months either. Now, again, this is a tale of two markets. The Northeast area and the city center, you're seeing the steepest year-over-year declines for detached housing for sales at nearly 20%. Whereas some areas remain very resilient, like the West and Southeast District, they're actually posting sales gains compared to last year as well. So that's where you can't just blindly buy anything in the Calgary market right now. You need to be working with an expert like myself who can put you in those value performance pockets. So that's what the Calgary market is looking like in June. If you have any questions or wanted to review your portfolio, or you're unsure what to do about any properties in Calgary or anywhere across Canada, I am here to help. Let's do a strategic review of your portfolio to make sure that you're set up for success over the next 5 to 10 years. Book a call or get in touch. I would love to help. Bye for now.